But once that grows, the reason that it's compounding is that that same rate of return, that rate of interest, is being applied to that new, larger amount of money. And I know a lot of people on channels such as this, they're not looking to grow their wealth over 50 years, they're looking to grow their wealth over the next 5. Getting out of debt as quickly as possible, good idea. Slightly overrated, however. Focusing on increasing your income, that's the ticket. Most people on YouTube don't really know how to give advice about finances. There's good advice on YouTube about finances, or good, let's say, topics discussed on YouTube about finances. There's bad topics discussed on YouTube about finances. And then there's overrated topics talking about finance on the YouTubes, on TikTok, Instagram, etc. What I'm going to talk about today is the 5 most overrated money advice. 5 most overrated financial advice that you typically hear on channels such as this, on TikTok, on Instagram, on what are some of the other apps people are using nowadays? Of course, YouTube, Snapchat, LinkedIn, etc. I'm going to talk about all of them. I'm going to talk about why a lot of people talk about them, why that they're good advice, but nevertheless, if you focus on these sets of things to think about, that you're gonna put yourself on a pathway of being just average with your investment and your financial life. So let's dive into it, shall we? But before we do, remember to like, subscribe, click that notification bell. This is Derek West. You're watching Finance Squared. Drop a comment down below, letting everyone else know some of the financial advice that you got, which is not bad, but having you focus on it caused you to be average in your investments. Or also, and alternatively, if someone is giving you some financial advice that is not that well known and maybe not as heralded, that has catapulted you to financial success and financial dreams, let us know. And achieving your financial dreams, let us know in comments down below what that advice was. Discuss it and let everyone know how smart you are. The first financial advice that people typically tell on channels like this is that compound interest is the bee's knees, right? Compound interest. Isn't it great? Yes, it is. Compound interest is fantastic. It is an awesome phenomenon, mathematical and otherwise. A great phenomenon that if you take advantage of, it will catapult your finances into the stratosphere and into areas that maybe you didn't think of, maybe you think you could reach. So why is this overrated advice? Well, there's 2 reasons for that. The first reason is that compound interest, well, it can definitely increase your finances, right? If you put $100 down today, and if you just let that sit in a bank account or an investment instrument that gives you and yields to you, we'll call it interest, but some kind of return on your money, and you let it sit there over time, what is happening in that instance is that that interest that's being yielded, or that return that is being yielded to that money, it's being added to that initial investment for that first period that that investment is there. But once that grows, the reason that it's compounding is that that same rate of return, that rate of interest, is being applied to that new, larger amount of money. So as an example, in our example, if you put $100 in a bank account, let's say a certificate of deposit, $100, let's say, in our example, and that certificate of deposit returns, this is going to be a phenomenal return for a certificate of deposit. But this is just an example, so don't get your panties in a bunch. 10% is the rate of return, the interest rate that's being paid to you for putting your money in that certificate of deposit. That 10% to that $100 in our example, after, let's say the period is a year, turns your money into $110 after that year. The next year after that, that 10% is now being applied to that $110, that extra money that you made over that period, that year. So now you have $120 in your bank account. The period after that, the year after that, that 10% is applied to the $120 in that bank account, in that certificate of deposit. I'm doing my math right, and if I'm keeping my example correct, if I'm able to keep my example in mind appropriately, you're taking that 10% on that $110 in your bank account. So now you're adding $11 to your bank account in that next period, and so on and so forth. You keep adding that rate of return to that original investment until it becomes, and until it grows to a level, in a lot of cases, where it increases exponentially. So like I was saying, that is a principle that you should take advantage of in your finances. However, it's overrated. In a particular example, the amount of money that you invested, $100, the amount of interest that you get back on that, it's really not that great, if you noticed, right? So you took that $100, then you added $10 to it. Now you have $110. The next time you're gonna be adding, let's say, $11 to that. Now you have $121, and so on and so forth. If you take a look at that example, you'll see that yes, the interest on that initial investment grows to a great degree, but you also notice that the amount of money that you get after that, also not that great. Yes, it may have increased at a rate That's kind of staggering over, let's say, a 50-year period. But it took 50 years for that investment to grow to a large amount. And I know a lot of people on channels such as this, they're not looking to grow their wealth over 50 years. They're looking to grow their wealth over the next 5. In some cases, the next 2 years. Now, is that an unrealistic expectation? Yes, it is. But at the same time, compound interest is, as a mechanism to do that, is overrated. Now, that's the first way that compound interest is overrated. The second way that compounding interest is overrated is that a lot of people talk about the positive side of compound interest, i.e. what I just talked about, your investment growing over time, your initial investment growing over time, thanks to that rate of return being returned back to that initial investment, and as it adds up, your investment keeps growing and growing and growing. But the second way that compound interest is overrated is that compound interest can actually be used against you. If, for example, you're consistently paying interest rates on things such as home, what we like to call in this industry bad debt. And I'm sure there's going to be a little bit of controversy over whether or not home is bad debt or not, but roll with me on this one for a second. What's happening is those interest payments that you pay over time, they actually pull from your ability to invest and reinvest in yourself. See, those interest payments that you're making to own those things, taking it away from the money that you could be using to lend out to put your money to a certificate of deposit like you said earlier. Take a look at this chart of how much interest you pay on a $300,000 house after 30 years, your typical 30-year mortgage. Just imagine how much money you would have been making if instead of paying that interest on that house, you were instead investing it into an S&P 500 index fund, for example. We'll talk about those in a second, but you can begin to see how compounding interest works against you if you consistently purchase and invest in the wrong things. And that talks to the other overrated money advice, and that is to get out of debt as quickly as possible. Right? I just talked about compounding interest, now paying it actually works against you in terms of compound interest. Well, that's very true. And keep in mind, all these things, all these overrated money advice, I'm not saying that they're bad advice. I'm saying that they're slightly overrated. And getting out of debt as quickly as possible, that can be overrated advice. Now, why do I say that? We talked about homes a second ago. And a lot of people on the internet and in life in general dispute whether or not purchasing a home is good debt or bad debt. I'm gonna talk about purchasing a home towards the end of the video. Some people claim that purchasing a home is good debt. Other people say that purchasing a home is bad debt. I'm not going to talk about that in this video, but let's assume for the sake of this point that purchasing a home is good debt. In the event that purchasing a home is good debt, what you're really saying there is that you're borrowing money to purchase an asset that eventually, that asset, once you have 100% ownership of it, should theoretically grow your wealth. In other words, if you have 100% equity in that asset, it either remains at the same value that you purchased it, or it's going to grow in value so much that it's going to offset any of the interest that you have paid out over a period of years. A lot of people focus on your house, let's say, doubling in value after a 30-year period. That should theoretically have you break even if you have a 30-year mortgage on your interest payments. And for the sake of argument, let's say we're not counting fees, taxes, property taxes, etc., maintenance that tends to creep up on people when they own their own property, for example. That's a whole other discussion, a whole other video. I believe I did one on that. Be sure to check it out in the description down below or somewhere on my channel. In that particular instance, you could attempt to get out of debt for owning of that home as fast as possible, but with the interest rates that you're paying on that mortgage. And as a matter of fact, that is something that you probably should be doing, because no matter which way you slice it, being in debt means that you're servicing that debt, and when you're servicing that debt, you're not able to use that exact same money that you're using to service that debt, interest rates, to invest in other items that will increase your wealth, oftentimes at a much faster rate. But at the same time, if you're able to focus and increase your income, you should be able to get to a point where the amount of debt that you're paying, servicing that particular debt, becomes a minor line item in your monthly, yearly budget. So for example, if you purchase a $300,000 house and you don't focus on increasing your income, sure, you'll be able to pay off your home a little bit faster. But instead of focusing on paying off the debt, you focus on increasing your income, i.e. getting the skills, starting a business, getting a side hustle together that enables you to pay off your interest and off your debts faster. Now you're talking about something that'll power your future finances even after you've paid off your debt. So, like I said, getting out of debt as quickly as possible, good idea. Slightly overrated, however. Focusing on increasing your income, that's the ticket. I talked about side hustles just a second ago. I know that they're big on social media, etc. Not as big as they used to be. About 5 years ago when I first started this channel, they were huge. As a matter of fact, you'll see in my timeline the things that I talk about in Finance Squared. Side hustles was one of the big things. So a lot of people have recognized that side hustles in general, slightly overrated. And that's what I'm gonna talk about in this next point. Side hustles, they're not all that they're cracked up to be. And I'm sure if you're in this space and you've tried several side hustles yourself, you found that out. And there's two reasons why. Side hustles come in two flavors. Side hustles that are so simple that more or less anyone can do them. And because anyone can do them, a lot of people do them. And that means you have a lot of competition. Not to mention the fact that because so many people do them, the value of them being executed to the person who you're executing these side hustles for becomes lower and lower and lower. In other words, the value that you get back to yourself, or the amount of money, to be specific and to be concrete, the amount of money that you get from these side hustles actually is pretty small. The other thing about side hustles is the ones that really are lucrative and the ones that can drive your finances into the stratosphere, they're typically so complex. They typically require so much time. They typically require a lot of effort from you, the side hustler, that they take away from your main gig. They take away from what you're actually doing. And in a sense, you become a jack of all trades, master of none. And what typically happens in situations like that is you're not good at any one thing. And the thing that really drives income higher, and higher income, that's really one of the keys to better finances in general. But because you never really master any one thing, your income never really increases the way it should. The two paths of why side hustles are really not great. That they're either too easy that anyone can do them and that they're not that lucrative, or that they're so complex that you never become really good at any one thing, either your main hustle or your new side hustle. And you end up in a place of limbo that keeps you stuck and unable to get to the place that you need to be to really have your finances hit home. The next overrated financial advice that you'll hear a lot about on YouTube is investing in S&P 500 index funds. S&P 500 index funds are fantastic. As you know, they follow the index of the S&P 500. And the S&P 500, if you watch it over time, has averaged anywhere between 8 and 10% year over year, such that if you invest in it, and only in it, over a period of time, we talked about compounding interest a little bit ago, but if you invest in it, and only it, over a period of time, your wealth will compound almost exponentially. The S&P 500 is so broad-based, so it covers the market in such totality. I came up with a new word there, totalitarian. But it covers the market in such totality that in general, it's almost like you're investing in nothing, except really the growth of the general market. Now remember what I talked about in this video. These are not bad investment advice, not bad investment strategies, investing in the S&P 500 index fund. But it is overrated in that your investment is so broad-based. Yes, your investments will grow over time. And yes, there's a chance that if you keep investing and you continue to invest and you don't sell out when it dips and you don't buy in too high when it goes high, but you keep investing consistently using a little bit of dollar cost averaging. After a period of time, your investments will almost exponentially explode, exponentially grow. The fact that they're so broad-based, however, limits your ability to truly grow exponentially. If, for example, you invest in a company that is going to grow in your mind exponentially, for example, Tesla, Amazon back in the day, Apple back in the day. If you invest in those individual companies and you consistently invest in them because you believe in them, because you have the market fundamentals that you know they're going to make these homes, that you know they're going to make these investments grow to a specific degree, investing in single stocks, having a single stock investment strategy, that can power your investments to grow exponentially. So yes, investing in S&P 500 index funds, not bad advice. Coming up with a strategy to invest in single stocks or another investment strategy, if executed well, for sure will power your investments at a greater rate. The biggest piece of overrated advice that happens to be broadcast on the internet. It's not a surprise to many of you, and I've been pushing this position for a while now. But the home as the American dream, I feel that is one of the most overrated pieces of advice that you're ever going to hear on the internet. Now, is owning a home not the American dream? It is the American dream. But unfortunately, as we've seen over these last couple of years, the American dream has sort of watered itself down to just being average or slightly above average. And that's where owning a home is going to leave you. Now, I want to be clear here. Owning a home is not bad for your finances per se. Owning a home can be good for your finances, but I say that it is overrated. It's not the financial panacea that you've been led to believe. Let me talk about 3 reasons why. When you own a home, this is starting off with the most common reason for why owning a home is considered not that great. Home ownership calculations that you typically find on the internet typically revolve around whether or not owning versus renting is a good thing versus a bad thing. Let me clear that up for you right now. Owning is better than renting in a lot of instances, particularly if the interest that you pay on your home is less than the rent that you're going to pay on your apartment to a significant degree, because the rent is going to continue to go up, and theoretically, your interest payments should go down over time. That is, if you're not consistently refinancing your home. Now, that stated, what is typically not taken into account is the fact that you have a bunch of payments to maintain the property that you own, i.e. the cost of investing in a home that you own is typically pretty high. So you have taxes, property taxes specifically. You have fees, real estate fees, home ownership association fees. Whenever something breaks down in your home, that's on you to fix. Your heater breaks down, your roof breaks down, your foundation breaks down. All those things are up to you to fix. And if you don't fix those things, the value of your home is going to drop quickly. So you have to maintain your home, your investment, and the cost of maintaining that investment tends to be pretty great. Second reason why owning a home is slightly overrated. Again, not bad financial advice to own your own home, but it is overrated. And the second reason for that is that ownership of a home takes your focus off ownership of other asset classes that tend to be much more lucrative. So for example, I talked about having the interest payment on your home be less than the rent that you're paying on an apartment complex or on a home that you own or a home that you rent, right? That's a good indicator of whether or not owning a home is going to be financially lucrative for you or not. That stated though, if you took those same interest payments that you were paying on your home over 30 years in a typical 30-year mortgage, but you apply them to an S&P 500 index fund, you'll see in a lot of cases that S&P 500 index fund grows faster. And in the end of that 30-year period, if you take into account the compounding effect that we talked about a little bit earlier, as being slightly overrated, but nevertheless true, if you take a look at how much you have in those instances, the interest that you pay in an S&P 500 index fund is in most cases going to be greater than the value of the home that you paid, that you've been paying for, even if you have 100% equity. Thirdly, the reason why owning a home is slightly overrated. Homes typically, in a lot of instances, unless you're in a high value market, they typically don't end up growing as much as people think that they do. What generally happens is that because home ownership is touted as such a high quality investment, people tend to invest much more money than they should in owning their own home or in owning this home and owning this piece of property. So they tend to be in the investment at a much larger rate than what they should be in. To top it all off, in a lot of instances, the home doesn't appreciate in value as much as they want it to or that they've been led to believe that it could. Those three reasons are why, in my opinion, ownership of your own home, while it's good financial advice, typically overrated. So what should you do instead? I know I just talked about the 5 pieces of investment advice that are overrated. What are the things that you should be doing instead? Well, that's actually a topic for another video. So be sure that you're subscribed and you have notifications turned on so that when it drops, you'll get it. And remember, a goal without a plan is a wish. A goal with a plan and no action is a wish list. I'll catch you guys in my next video. I'm gonna get out of here. This one's running a little bit long, so take it easy. Peace.